I'm Cesar Delgado from Back Roads of Illinois podcast. Welcome to the show with us for this afternoon's Markets Close with Kyle Bumsted in Erickson, Nebraska.
Hey, Cesar.
How are you today?
Doing fine, sir. I'm doing great, sir. It's dry, it's sunny, we're combining corn, it's 55 degrees, and it's beautiful harvest weather out here in central Nebraska.
Let's start to talk about the World Agricultural Supply and Demand Estimate report on today. Could you explain that about it to our listeners?
Well, it was just a monthly WASde report, supply and demand. They raised the size of our corn crop a little bit by about 1.5 bushels on corn, raised it by about 0.4 bushel on soybeans, raised our carryouts a little bit on corn, raised our carryouts a little bit on soybeans, stateside, but the world soybean number, they actually kind of lowered that a little bit. So overall, it wasn't a bullish report. It wasn't a bearish report. It wasn't a bullish report, but it really wasn't that bearish. The fact that December corn went down and tagged out at 466.5 and didn't find new sellers down there, I guess we'll call that a positive for now. But the charts technically look a little bit ugly as far as the corn goes. Unless we hold this level here and start to migrate back higher up towards that 480 area in December, that's going to be kind of top in the range. So from about, today's low 466.5 to 480 could be a new range we're carving out. Soybeans, we're about 40 cents off yesterday's highs. They were getting a bit overbought. We have seen some good sales here recently, but I do think that soybeans short term are overbought. We can gravitate back down to that 1330, maybe 1325 mark down there in that area where that 200-day moving average is for support.
How are the grain market for today's close about this report on this morning?
Well, corn closed lower, but like I said, we closed at 468 down. I think we were down about what did we close around about 6 cents lower on corn, and beans were down 22.25 cents here at the end of the day. Wheat was down as well too. Of course, there's plenty of wheat in the world, so everything was lower today. Wouldn't surprise me what kind of action we get going into Friday here. If corn gravitates back up towards that 470, 475 area, wouldn't surprise me. And if beans just kind of leak around here a little bit, wouldn't surprise me there either, finishing up on Friday tomorrow. And do remember, the markets are open tomorrow, but it is a bank holiday, so it could affect liquidity just a little bit for Friday's trade on November 10th.
I saw that in the morning. There are tight supply in the grain complex. Could you tell us what is your opinion?
Yeah, we've got plenty of supply. Of course, harvest is just kind of wrapping up here for most of the U.S. There's still a lot of corn out here in central Nebraska to be harvested. Our demand situation is just kind of our demand situation right now. We have a demand situation. The thing that's going to hold this thing together, obviously, is probably our feed category. We've got plenty of cattle around, still plenty of cattle on feed as observed by the markets here. Market thinks we got plenty of those here. We've got a cattle on feed report next week, but switching back to the grains here, we have seen some decent sales here in soybeans recently with that big China purchase. Yeah, we all knew about it, so it's about time that the market gets fed some good news like that, and it'll go down. Basis has been slowly firming. I don't want to say it's been off to the races here, but most guys locked up the bin doors. They're not moving any corn. Probably won't move any corn here until closer to the first of the year, maybe after the first of the year when they get their taxes done. So that's when we could see the supply issue hit the market again. We start to empty out the grain bins and see that tin can harvest, if you will. But exports have been exports are dismal on beans. We're way behind last year. Exports on corn could be better. We still have the ethanol grind that's helping us out here. But yeah, that demand situation is definitely could be an issue moving forward here, Cesar.
Now, how is in the livestock market for today and hog markets for this morning?
Hog markets, they closed a little bit higher today, but the main focus is on the cattle. Feeder cattle down $7.85 across the board. Front here, very ugly. Live cattle down $4.85 to $5 across the board there. Another bad day in the live cattle complex as well. Cash feeders have been lower here last several days, but that index is trading above futures right now. And November feeder cattle, they go off here on Thursday, a week from today, they go off. So if these cash sales stay steady out in the country, I'd look for these November here to pop up and meet that index. They're going to meet the index at some point in time here over the next few days. They're going to be cash settled against the index. So I look for there to be somewhere there, them to meet up. Live cattle, different story. We've got these non-commercial funds. They'll hold quite a bit of length out there in this live cattle complex. We're trading 180 to 181 cash this week, which is a basis dream. You can sell the cash, you can get cash and your hedge, so you're picking up a pretty decent basis. So that's what they're going for, and I think that's what you saw here. Now, tomorrow being Friday, today being Thursday, we saw the non-commercial liquidation. There was commercial selling as well too, as indicated by the spreads. We could see some back and fill here tomorrow on Friday, just for the simple fact that we've really run this market down here over the last 3 sessions, basically. Yesterday was a spike reversal potentially on the daily chart, but that got negated with today's action. We could basically be running out of sellers at some point in time in this market, just float higher. So that's what kind of action I'm hoping for here to round out the week on a Friday. If we were open a couple dollars lower, I might take a look at short-term buy on them, but I've got to see the action before I commit to anything on tomorrow's market. It's been very ugly in the cattle complex the last couple of days. Just too many bulls out there, too many people bullish. And we've got a cattle on feed report next week that could potentially show us the highest placements we've seen here since they started recording cattle on feed reports here back in the 90s. So that kind of got passed around the trade here middle of the week, and that's kind of what I think some of the traders were thinking. That's why they kind of started selling, and we've done some technical damage to these charts as well.
I didn't hear anything about the commercial cattle.
Yeah, the commercial spreads, I guess I refer to that in the commercials where they're selling the front month, buying the deferred contracts, or when they're bull spreading, getting some coverage, the commercials buying, they're buying the front month, selling the deferred, they're bull spreading the market. Well, yesterday they were bull spreading a little bit. Today they were in there in full force bear spreading. That Feb April, that closed near its lows today, and that Feb cattle contract closed about unchanged. So I do think that there was a little bit of commercial liquidation, a little bit of commercial selling as well too, and that's kind of what drove the market down on top of that non-commercial fund selling.
Finally, what is the forecast for this grains markets in 2024 markets year?
That's a good question. I've personally been hedging both December 24 corn and Nov 24 beans. I think there's going to be plenty of grain around, and I think that with interest rates the way they are, I think guys are going to be selling. There is that ratio of beans to corn is about 2.5 beans to corn right now, which says that they're probably going to have to buy a few corn acres, but I don't know how many. I just don't know if they're going to be real aggressive buying corn acres just yet. That's a spread that some folks will watch. I've been watching it since September, but that is definitely the indicator one needs to watch here going through the winter months here, and that's going to give us a better read on next year's forecast. But I'm not that bullish on agriculture, on ag markets moving into 2024 right here as we sit here at the end of November, middle of November.
Is there anything would you like to go to be telling our listeners about the markets in today's report?
I think that rallies probably need to be used as selling opportunities in the grains and the live cattle complex. We need to take a look at that. And if we hold these lows here in corn, it might be all right to get some calls on and replace some of those bushels that we're selling off the combine and what we're selling here at fall harvest. So keep that in mind too, that we're trading a range right now. And as long as you've got the grain sold, and if you've got it re-owned with some form of an option, you know how much you're risking by owning that option. So that's what I'd like to leave the listeners with.